So Fintech 1.0 really started in about the 1860s with the invention of the first transatlantic cables.
Like, how does it impact VC priorities in fintech?
So 2021 was peak growth at all costs. The European Union tends to have an attitude of regulation first, innovation second. So from 2022 to 2023, VC funding into the UK fintech space dropped by about 30%.
Hello, everybody, and welcome to another episode of the Curiosity Code podcast. I'm Alex, host, and we're recording today this episode from Lisbon, and we've got a perfect guest for the setting, Veronica Maria Glab. She is a fintech strategist and former head of partnerships at Innovate Finance, where she led the UK's most trusted investment report, the very one that reaches 10 Downing Street. Veronica's career spans the US, LATAM, and EMEA, connecting startups, VCs, and regulators, and getting big banks through the future of finance. From the rise of AI to the legitimization of crypto, she's been right in the middle of it all. Veronica, welcome to the show. I'm really happy to have you as a guest.
Thanks, Alex. Happy to be here too. And in person in Lisbon. It's not so bad.
Yeah, it's first episode that we're recording in Lisbon, so I'm really excited about that. I always love in-person recordings. And let's kick it off by, can you walk us through the evolution of fintech investment over the 10 years? What you witnessed and how the industry has transformed?
Yeah, absolutely. I mean, I think if we're going to talk about even just the last 15 years, we have to even rewind a lot to, let's say, mid 1800s. Because now right now as an industry, we're in what's called Fintech 3.0. But just very quickly, so we have to understand what's Fintech 1.0 and Fintech 2.0. So Fintech 1.0 really started in about the 1860s with the invention of the first transatlantic cables, which really shifted how the world did banking. Telecoms companies really changed how we also did ledgers and basically note-taking and data-taking for global financial systems. That lasted until about the 1960s, where we got into Fintech 2.0, which is that first digitization era. So that era went up until about the year, let's say 2008. And this is where we have the introduction of credit cards, where in Western countries, women were allowed to have bank accounts for the first time. That, new waves of customers, new waves of digitization, electronic innovation, also email, PayPal, which is like that OG fintech. So I mentioned PayPal, and we even had SWIFT facilitating international money transfers. But then what happens is that 2008 financial crisis. And right around that time is when consumers as stakeholders in the financial system really started to be involved because they really lost massive trust in institutions. And so you have the birth of companies like Stripe around 2010, Coinbase around 2012, and some of the neobanks that we now know as Revolut. So this is around the time when the term fintech is coined. So when we look at fintech VC investment, it's around that time that we start seeing early stage venture capital funds deploying capital into kind of three main categories. So one, financial apps, payments companies like Stripe, and neobanks. So that's the first generation of what we call fintech when that term fintech was coined. And so that over the last 10 to 15 years has also evolved massively, way more massively than we have seen over the last 150. From 2008, as fintech becomes a buzzword, it was really around 2015 that we started to see VC funding globally pick up and exceed 4 or 5 billion. And then in 2019, we see those figures escalate to 10 billion in VC money invested globally. And then something happened in 2020 which is it goes to 32 billion invested globally. And that's from seed stage through like very, very late Series F, Series I. And 2021 was that watershed moment where, we nerds in the industry, we knew fintech was big, but investment reached $106 billion globally. This was that absolute watershed moment. This is where every regulator started to pay attention to fintech if they hadn't before. And it very quickly changed again, where in 2022, investment was flat. 2023, it dropped by 50% to about 56 billion globally. And in 2024, it stayed kind of flat. So throughout all of this time, from 2015, you see a lot of seed stage deals to your first later stage deals in 2018, 2019. You see a couple deals here and there going over that $100 million mark to 2020 and 2021, where we had hundreds of deals over that $100 million mark. You had $1 billion deals for Stripe. You had someone like Starling Bank doing a $600 million deal and then a $500 million one in the weeks after that. So the size of deals, the checks being cut in global regions as well, not just the US or the UK. Fintech went truly global. And even today, as investment starts to correct itself and stay at steady levels of growth, what we're now also seeing is we're seeing bigger deals take place across Latin America, East Asia, rapid digitization across the Middle East. So fintech is truly a global industry where also the regulators are responding to that huge level of investment.
What caught my attention is 21, 22 kind of turning point. Yeah. Let's dive deeper in that period of time. What was happening back then, and why it was so big turning point for the industry?
Yeah. Well, obviously a lot of that's going to be contextualized by the COVID pandemic. COVID spurned the digitalization of every industry. And so 2021 in many sense was a response to that. But it was also the peak of the growth at all costs mentality coming from founders, coming from VCs. We were also coming off an era where, WeWork was massive, where, Facebook was absolutely massive, like these super unicorns at large. So 2021 was peak growth at all costs. And that 106 billion invested into fintech, again, this is globally, that was 237% or so, about that much over the previous year when 2020 was already a historic year. And that's when it changed in 2022. When I was speaking to VCs, I did the report in 2021 and 2022, and the data comes from databases like PitchBook, but it's really VCs who also give that qualitative input of talking about their methodology of why they're deploying money from point A to point B. And in 2022, almost universally, the VCs that I spoke with said, oh, we've got a recession coming. And it's going to be, and they said this contraction is coming. It'll take 18 to 24 months. We're not going to have the V-shaped recovery we thought we would have in 2020 post-COVID. And you can kind of say to yourself, well, maybe if you had a macroeconomist or an economic historian on your team, you might have seen that every 100 years or so, these historic patterns repeat. But again, 2022, the VCs started to really put the kind of their foot on the brake and refocus on due diligence, on much more prudent investment and delivering ROI to their LPs. As a result, most of the deals that took place in 2022, where we also had about 100 billion invested into fintech, were carryover deals from 2021 announcements. But it was a rapid shift in the mentality. So both from the VCs, who were much more prudent all of a sudden, to founders who now had to focus, if they wanted the funding, they had to now focus on having a truly innovative product that they're bringing to market, a lean operations, and proof that they either were profitable, on the way to being profitable, or had some sort of revenue. So just this maturation of the industry, which really meant more mature behavior from everyone involved, like acting like an adult about a very challenging situation, taking a much more measured and sustainable approach.
I would imagine that's not specific to fintech only, right? Like all
Absolutely not.
industries went through that.
Oh, exactly. Absolutely not. It was, we saw this in big data, health tech. I think I looked at, 10 different industry verticals. So crypto saw the same. Crypto had crypto winter. Pet tech, any tech any niche or big tech vertical, they all had a contraction. Fintech was actually one of the few verticals that did not have such a dramatic contraction, because we also got to this era where finance is embedded in everything that we do. So there was a real resilience to the industry that helped fintech stay relatively stable, even as other industries around it were going down. And then again, if you compare the data against fintech, against other capital markets, and we're talking agriculture, commodities, oil, fintech actually, in terms of its rise and fall, followed a very, very similar statistical pattern, which kind of goes to show that it was neither more stable nor more risky than any other VC or, for that matter, private market or capital market investment.
So looking at where we are now, how macroeconomics changes, regulatory pressures in different regions, EU, Middle East, US, bunch of geopolitical stuff is going on. Like, how does it impact VC priorities in fintech?
Yeah, there's been a few global events that have been genuinely cataclysmic, right? You have the war on Ukraine, that really brought up inflation in many ways. We had global supply chains being diverted as well. And let's be honest, a lot of price gouging from transportation companies, shipping companies, airlines that brought up prices for consumers as well. I think since then, geopolitics has only gotten much more complicated, but it's inherently tied to all of our markets as well. So where the regulators come in is now that fintech itself, it's an extrapolation of a global financial system. So with respect to fintech innovation specifically, and where fintech can have a place in a country or a region growing its own economy, this is where you start to see some interesting stuff happen across different regions. So very broadly, let's say Europe tends to have an attitude, or the European Union tends to have an attitude of regulation first, innovation second.
Yeah.
The US is a market where it's just very much, the regulation's very much responsive to whatever's happening in the market. So it's companies like Meta, innovate first, we regulate that later. Now in the Middle East, that's kind of interesting as well, because you see countries like Saudi Arabia take a very top-down approach where they actively said, we want to digitize our economy and get ourselves cashless. How do we do that? Fintech. And they've done everything from tax breaks to work visas to facilitate foreign workers, foreign founders, and foreign investors to come in and help build that infrastructure. So you see that mix across different continents or countries where they will take either a bottom-up approach like the US or a top-down like Singapore or Saudi Arabia or the UAE of, we have a fintech approach. Fintech is inherent to our economy, and this is where we go.
How does it impact VC's landscape, how they invest in fintech?
That's going to depend market to market. And that is going to have to do a lot with the laws or regulations that a country passes incentivizing foreign investment. So that is something that in many European markets, which tend to be quite risk averse or may adopt some, let's say, minorly protectionist strategies that put heavy tax levies on foreign workers or foreign VCs. That in many European markets, particularly in Southern Europe, that tends to be the case. Meaning it's kind of hard to have that market entry as a VC, and you may be taxed quite heavily on capital gains. So UK or US VCs may not be quite as incentivized naturally to make portfolio investments in perhaps Spain or Portugal or Italy. But where you look at other countries that actually really look at those, whether it's tax levies or capital gains, financial structures, they really stand to benefit a lot. So that's what you're seeing a lot now in Saudi Arabia, UAE, Bahrain. They're doing everything they can to really bring that foreign investment in, but also as well to support their own VCs or LPs or family offices in taking investments abroad as well and looking at the opportunities in Europe or the UK.
With legitimization of crypto and rapid advancement of AI, we're definitely seeing like big changes in the industry. What emerging fintech sectors are capturing VC attention right now?
Well, now that you mentioned crypto, let's talk about crypto for a little bit. So, I mean, Binance just did a massive $2 billion equity deal about 2 or 3 weeks ago in March in Malta, which, touching on the regulatory piece, that's super interesting because that, it's one of the biggest companies in the crypto space. Yeah. And to do that deal in Malta really legitimizes Malta as a hub for crypto and really legitimize all of the regulatory efforts that the Maltese government has done to make it an interesting place and a profitable, valuable place to do crypto. So what Binance are doing, the reason they took that funding was specifically to enhance their offering of blockchain payments and transactions, but also AI. And they've been a little bit vague about what they'll do in terms of AI. That could be, anything from AI applications to, do data projections and help make smarter investments, to de-risk data, to enhance due diligence. It could be anything. Or maybe something that we haven't even thought of yet. So that in and of itself will be one to watch because Binance will set the standard for a lot of other, platforms to follow on. But what's also interesting about crypto investment more broadly, so crypto actually occupied about, I want to say almost 50% of all VC if not globally, then certainly in the US. The bulk of crypto investment in 2024, about, I think, almost 50% of the global funding was in the US. It's been a very quick boom, but we have to be careful. Because the US is always an outlier in many ways. So wherever you are, whether it's the UK or Malta or Singapore, you may have a very different VC environment if you're in the crypto space. But because all of that is happening in the US, if you do watch the US and you look at how the regulatory environment's going to respond, we could see a very quick boom and bust. So it's definitely one market to watch just to see for yourself as a founder of how the regulation may evolve in the market where you're operating or where you're looking to make investments.
What about like AI vertical and fintech? Do you see any like emerging sectors from that, like taking like crypto aside?
Yeah, there's definitely a few. I've seen a few very cool AI applications to analyze capital markets. Like FinChat is one. No, but I've seen some very cool ones to analyze capital markets. A lot is taking place also in fraud detection. So using AI models to basically predict where or how fraud can take place and actually prevent that. I think that's also very, very cool. And it could have a massive social impact on protecting consumers. But I think at the moment, a lot of AI is still limited to market analysis or data analysis. And AI innovation is always going to be pretty limited to the limits of the human imagination. So there will, I think, over the next year or two, really be some breakout startups that present a truly original idea. And they will be few and far between, but they will be the ones to make waves. And then I guess kind of the one thing I get on a soapbox on is what we're going to see is as soon as we find commercial viability for quantum, it is game over. We could see a very quick boom and bust for AI, much faster than we saw for fintech. Like that boom and bust could take place within a year. Because there's so much VC excitement around this vertical, but there's not a lot of knowledge. Once you compound that with quantum, which is a very complex technology for a lot of investors, understand, it's game over. And quantum is going to impact so much of how well are fraudsters able to commit fraud by deciphering code or encryption, and how well we're able to defend against that, how quickly and how well we analyze any sort of data. So it's just going to speed up everything.
Yeah, and given like how technology is evolving with the speed of evolution, I think it's just a question of year or two when we see that.
Oh, it is scary. It's cool, but it's scary.
Yeah, the question is how fast you can adapt to that, right? Like as a entrepreneur, as a founder, as a consumer,
as an employee, right? Yeah. There's the very legitimate question about, are we going to get replaced by automation? And I think a lot of the industry sort of common sense is that no, you will not get replaced by AI or quantum technologies, but you will be replaced by someone who knows how to use them.
Exactly.
So
I love that.
Study ChatGPT. Look at the tools of how you can automate your workflows, but think about where you can use AI creatively, because again, that innovation is only limited by our own imagination anyway.
Yeah. It's like prompt engineering skill set.
I have so much fun with that.
I'd like to talk about Finance Investment Landscape Report, which has become a key resource for the industry in UK and even reach number 10 Downing Street. What makes this report so unique and trusted?
Yeah. So it's contextualized by the fact that Innovate Finance, as the trade association for fintech in the UK, it's an organization founded by a government mandate to create a voice for fintech, but it's not a government-funded organization. They are funded by their members, a lot of the events that they do. So that keeps the organization, really responsive to its members, the fintech innovators. And with specific to that report has by design always been editorially neutral, which means that we never took sponsorship to create that report. Innovate Finance could take sponsorship for running certain events programs, but that report was always done with the data in mind.
How long has it been around?
That's a good question. I think it's been around for 6 or 7 years. I was sort of there were 2 generations of colleagues who did that report before me, so I kind of look at like my report, predecessors, my fintech report dad and my granddad, and it's kind of funny because I'm actually still in touch with the guys who've published it before me, and we've all tried to stay really quite true to a certain rigorous research methodology, so that when I inherited that report and really tried to make it my own with certain narratives that respond to what's going on in the macro environment. I had a rigorous research methodology that I also then had to defend to our C-suite and our board. So it goes through a lot of questioning through impartial voices, which keeps it fun to do, but neutral by design.
So on the latest version of this report, what are the most surprising trends that you uncover in UK fintech industry?
So in the last one, I actually published a similar report independently in January, so not in association with Innovate Finance. But for me, one thing that did surprise me was that the UK is kind of at this inflection point. So just to give you a picture of the data, so from 2022 to 2023, VC funding into the UK fintech space dropped by about 30%. And then from 2023 to 2024, it dropped a further 28%. And, I was surprised, but also not surprised by that. To some extent, I was surprised because the UK, it is a fantastic place to do fintech. We have amazing research institutions like Cambridge, Oxford, the London School of Economics. It's such a hub for financial services. The fintech ecosystem is really good and very organized. And it's just a very cool community of extremely diverse entrepreneurs. I'm in London once a month, and I love it because it is so cool. It's such an energizing place to be around with founders. But I'm also not surprised because the UK is at an inflection point. There have been I think the last two administrations in the government really didn't deliver on some of their promises to the fintech industry, to the tech industry as a whole. The previous administration made a lot of promises of making this a great hub for crypto. They never delivered on it. The current administration is also not delivering on a lot of its promises to small businesses because the chancellor's budget is effectively raising tax for small businesses. That makes it more expensive to hire and retain good talent. It's a low point in morale. It's an inflection point from, I think, citizens, the business community, and the government and the regulators are going to have to listen to that. I was surprised, but not surprised by that stat.
So we, as people who are in the industry, so I'm just curious about the actual trends that will be surprising for the people in fintech community to see that's happening in the UK but not happening in the other regions or.
Yeah. Well, I think what's happening in the UK is not totally unique to the UK.
Right.
In fact, it can actually be a little bit of a warning flag for Europe, where Europe tends to be quite regulation heavy, and there is a culture of risk aversion in investments. The average check size for a VC round in Europe tends to be a bit smaller. Europe has been struggling the last 2 years to do too many deals post Series C. So it has some of the similar issues that the UK has had. That regulation sometimes can really put a damper on the innovation, because you also see a lot of founders going to the US to get that late stage round. However, I do think recent politics in the US is a little bit of a boon for Europe. It's a wake up call. It's certainly a wake up call that Europe has to be a little bit more unified as a market in order to support founders. And there are probably certain areas where you can not push away regulation, but at least do away with some of the red tape that slows down decision making. Because at least if regulatory frameworks are clear, founders can work with that. VCs can work with that. But if you're slow to take a decision, that's what's going to push a founder to go to another geography and raise that round. So I think Europe is having this wake-up call. And then, in other regions, we're just going to have to see.
Were there any regions or verticals globally that stood out as fast risers? Ones that we have to watch out this year based on this year's data?
Yeah, look, I think I already mentioned Malta.
Yes.
I think the evolution of Malta as a fintech hub is definitely going to be one to watch, just in terms of can they keep up the regulation and a friendly environment. It's also going to be a little bit of friendly competition with other places like, let's say, Portugal. We're also we have a big crypto community, or Cyprus. So I think that's going to be really interesting, is to see a little bit of this healthy competition between environments. But there are a couple of fintech verticals that have also performed really well in terms of investment, but perhaps are a little bit slept on when all the attention goes to crypto and AI. So wealth tech. And I think wealth tech is super interesting because we have, as millennial and Gen Z, they're about to be the biggest generation of wealth inheritors globally. So that's a whole new customer demographic who handle their finances and investments in a totally different way than previous generations. So they need different kinds of marketing. They need a different sort of duty of care. But we're also seeing the democratization of investment. So, through tools, whether it's something like a primary bid or a money box or, just pocket money or high yield savings accounts, we're starting to now see a democratization of investment services that allow for anyone from, high earners to low earners to start enhancing their own financial literacy, learning about investment products, learning about saving, and really making these tools not just more user-friendly, but more affordable to use. So that could be anything like new innovations in robo-advisors, more personalized wealth management, democratizing fractional investments in stocks, private equity. So you see Monzo doing this. You see Crescenta doing this in Spain. Platforms like TradingView, Trading 212, that this wealth of information that's available, but also very, very user-friendly tools at very different price points. I think that one is super exciting.
For the founders that tuning in and listening to the podcast. In your opinion, what should they be paying attention to in the next 12, 18 months?
I mean, there's a lot, right? Look, we can't ignore regulation and geopolitics right now. It's tough. We're in a challenging environment with a lot of uncertainty, even with different markets, economic policies. And that's, my advice to founders would be, not to get too mired down in those details, because one of the heaviest lessons we learned during COVID was when, we first started having the quarantines. A lot of companies made very rash decisions to let half their team go or cut spending on this or that, and they sort of tried to pause business as much as they could. So pause all of their investments and outgoing expenses. But, the natural way of the world is the world doesn't stop. You might have like a totally cataclysmic event like a pandemic or, God forbid, a war, right? The time doesn't stop. Your business has to go on. We've seen a little bit of this behavior of like companies cutting marketing spend or hiring in 2022, 2023, because we didn't know if we would have a recession or not.
Yeah.
So my advice is, look, if you have a good idea, you have lean operations, you have a sustainable financial model, at some point you have to press on, right? So we're in a challenging environment right now, but you do have to press on, and if you stop, you lose time. That so that's, I guess, sort of one piece of unsolicited advice. But other things to watch as well. Is look, watch your own burn rate as well. Like, be smart. Make decisions. Don't waste too much time. But be smart. Don't use AI unless you know exactly what expensive products you're investing in. Humans still do very good work, and you will need talented individuals to operate a lot of these programs you may be investing in. You need an AI strategy if you're going to start investing in that. And look, the funding environment is going to get more and more competitive over time. You just have to have a very, very solid business model. Be open to potentially different types of exit or pivoting that business model. Fintech will always continue evolving.
Yeah, it sounds like it's like never-ending story of running business at the high level of uncertainty, right? Like
it's high-level stress. It's why I'm not a founder. I just talk to them. But that's the thing, is you're a founder yourself, so that day to day.
Yeah, I could totally relate to the point you made about making a call whether you should invest into AI and how much of AI should be in a day-to-day business. Like it's a balance between actual humans doing the work and AI. And I don't know. I wasn't able to figure it out myself yet. I'm still going through that.
Yeah, you have to take the time, because that innovation is happening so fast. I heard on another podcast that this is the year of agentic AI, and there's vertical AI and horizontal AI. Meaning they have different, either very narrow, very wide applications. So you have to have an AI strategy, because otherwise you might be spending a lot of money on something that you don't get an ROI on because you don't know how to use it.
Right. Yeah. We actually built lots of agents for the clients, and it's some solutions, they work well, they're already time proven, and some not yet. So it's still a direction.
West.
Yeah, that you need to be really careful with when you're investing money in that. I already mentioned the local fintech community.
Mm-hmm.
Veronica, in your opinion, what's the best way to get into the community, to get more involved? Are there any specific events that you may recommend that's happening or will be happening in the upcoming months?
Yeah, well, such a good question, because this is what I do a lot of consulting work on. I do a lot of go-to-market and ecosystem mapping strategies, but there's a few sort of layers that you have to go through or consider if you want to go into a new market, even if that's your domestic market. one, you have to know who the regulator is and more or less what's the regulatory sentiment around the particular technology you're working in. Second, take a look at the local trade associations who are there. This could be like in the UK, they've got the Department of Business and Trade, and London and Partners, and the Payments Association, the Payments Association hosted a really great event, Pay 360, at the end of March. But then beyond the trade associations, it's any other sort of grassroots organizations, so something like a fintech fringe or a local fintech club. Then you're going to have to understand like who are the VCs, that's the institutional guys, but think about who are the best, most expert, hands-on boutique funds as well. And then think about like the lawyers and the service providers and consultants and tax advisors, because believe me, you will need those. And a lot of the grassroots fintech organizations will be run or sponsored by someone like like a Deloitte, like a big consulting group or a big law firm. Some of these guys are very, very active in their own communities. And if you're at the very early stage, the accelerators as well. The accelerators are there, yes, to potentially invest in your company, but also to really elevate and help you distinguish your product or your concept from another. Since we're already in April, the kind of big fintech events for Europe, it's going to be in June, Money 2020. Other ones that I think are quite valuable is that in May, we've got the Dubai Fintech Summit in the middle of the month. That's been a massively growing one as well. And then also, if I can do a little plug, like stay tuned for Miami and Dubai Fintech Summit in May. You've got Money 2020 covering Europe in Amsterdam. The Next Web in Amsterdam also do some fintech focused events. London Tech Week will have a fintech component in June. UK Fintech Week in April. There's a Fintech 24 in Saudi Arabia. We're now working towards September. Got Super Return. You've got Slush in Helsinki, which is more VC focused. There's a lot. I think I'm going to have to share some sort of Excel list because on any given year, there's about 80 to 100 events that are either fintech only around the world or have some sort of fintech focus. And it really just depends on what kind of audience you want to connect with and in what geography. But
they predominantly globally focused or like it's specific markets that they...
Yeah. The very, very biggest ones will be Money 2020 in Europe and in Vegas. And again, the ones to kind of watch will be, I think, Fintech 24 in Saudi Arabia, Dubai Fintech Summit. The Middle East, it's really making a name for itself and really drawing a very, very international community. So those are very much global, not local events.
Nice. Love it.
Yeah. Any excuse to go to Dubai and be in the sun. Right?
That's pretty much it. Thank you very much for your time.
Thank you. It's been fun.
Sharing your knowledge, experience about the industry, about the community, about what's happening in the UK and globally. Appreciate it a lot. Thank you.
Thanks. It's been very fun, Alex.
And for the listeners, thanks a lot for being with us. And don't forget to subscribe and hit the like button. And see you next time. Bye.